Well, good morning and welcome to Noble Capital Markets Virtual Healthcare Conference. This morning, I have the pleasure of introducing Larry Heaton with Zomedica. My name is Pat McCann, and I am a research analyst with Noble Capital Markets. So without further ado, let me hand it over to Larry, and we can take some Q&A after the presentation.
Thank you, Pat. I'm Larry Heaton, the CEO of Zomedica, and I'm joined today by our Chief Financial Officer, Peter Donato. At Zomedica, we're about the business of helping veterinarians take care of your pets and ours. I'd encourage you to take a look at our forward-looking statements disclosure. This presentation will be available on our website at www.zomedica.com. At Zomedica, our mission is to help veterinarians do the things they really love to do, improve the quality of care for pets and the satisfaction of the pet parents, but also importantly, to help them do the things they really need to do for their financial well-being of their practice, which is to improve the workflow, the cash flow, and the profitability of their practice. The animal health market is very large. It's much larger than $62 billion, but $62 billion is the U.S. veterinary services market in which we participate. And it was large before the pandemic, and during the pandemic, 23 million more kittens and puppies were added to households in the United States. And the group that brought the highest percentage into their households were the youngest among us, assuring a future generation of pet parents. And it is pet parents, it's not dog owners, because today pets are part of a family. And as it turns out, there are a whole lot of things people would give up before they would not take their sick or injured pet to the vet. And that's where we come in. We provide products, technology for veterinarians to improve care for pets when they're sick or they're injured. Our addressable market has been built to $2.5 billion on an annual recurring basis. This is separated between two segments of products, therapeutic devices and diagnostics, and we'll talk about those in just a bit. And we're experiencing significant growth in both therapeutic devices segment and the diagnostic segment while maintaining industry-leading margins. Each of the products that we sell of our 5 product platforms has a recurring revenue element to them. And as we've acquired companies and product lines over the last 2.5 years, we've really focused on this segment of the business. And today, about 65% of our revenue comes from the consumables associated with our products. We're very much a razor and blade company. And those consumables represent an opportunity on an annual basis of $2.5 billion. Of course, we only did $25 million in sales last year, so you can see we've barely scratched the surface. Now, just because we're razor and blade and focus on the blade doesn't mean that we can't sell the razor in some cases as well. And so for our therapeutic devices products, we sell the capital as well as one of our diagnostic products. And so we have an additional $1.5 billion of opportunity over the next several years. Our products are segmented into therapeutic devices, our PulseVet system, which is used in the clinic, the Assisi Loop, which is sent home with the pet parent to take the healing home, and 3 products in our diagnostic suite, including a electronic microscope, a laboratory blood analyzer, and a monitoring device. Each of these meets what we call our 5 pillars: improving the quality of care for the pet, the satisfaction of the pet parent, and the workflow, cash flow, and profitability of the practice. Now, we've been doing pretty well. We started in 2021 with our very first products on the market early in the year. I joined the company in October of 21. We made our first acquisition at that point, and we went from no revenue in 2020 to $4 million in 21, 19 million in 2022, and just over 25 million last year, all while maintaining industry-leading gross margins of 69%. We guide people to margins of 65 to 70, but lately it's been 69%, and we expect it to be toward that end of the spectrum as we move forward. While we're not yet profitable, our cash burn from operations is manageable. Last year, in total, $10.8 million. In the fourth quarter, $2.6 million. With $100 million in the bank in cash or available for sale securities, cash equivalents, whatnot, we've got a very solid balance sheet, no debt other than lease obligations. And so we remain very well funded, not only to manage our operating burn, but also to continue to invest in organic growth of our products, as well as additional acquisition opportunities. Our products, we'll spend just a few minutes on each of the products. The first one is our therapeutic device, PulseVet shockwave device. Shockwave therapy is really sound wave therapy. The sound wave is projected into the body, and whether it's to heal bones or to address tissue or ligament injuries or to heal wounds or to alleviate pain, there are over 40 clinical indications for horses and over 20 clinical indications for small animals. It's been used for horses in about 10 years, and it's become standard of care in equine sports and rehab medicine. We've recently launched it into the small animal market, beginning in late 2021. We're seeing rapid adoption in that particular segment of the market. When that sound wave hits the tissue or the bone or what have you, it activates the body's own regenerative properties. It increases cytokine production. It promotes angiogenesis or new blood vessel formation, neural growth, and circulation. There are over 20 clinical articles published, including randomized control trials that document the efficacy and certainly the safety of this technology. But really all the vet needs to see is how it works on their animals, because the treatment is immediately discernible to both the veterinarian and the pet parent. Economically, it's great for both the company and the veterinarian. We provide a third-party financing opportunity for veterinarians. They buy the system for $30,000, $32,000 all in with their first handpiece. And that financing program allows them to make no money down, no payments for 6 months, $100 a month for 6 months, and only then does the note begin to amortize. Meanwhile, with just an average number of treatments, or about 100 or so each year, they're able to generate enough revenue to not only pay for the system, but pay for the hand pieces and put some money in their bank account. This is right now our highest contributor in terms of revenue. When we acquired Pulse Veterinary Technologies in October of 21, it had revenue of about 12 million trailing. Last year, we were up to about 19. So we're doing very well with this particular product, and we expect it to continue to grow as we continue to expand indications. Veterinarians will purchase the Assisi Loop from us for around $200, turn around and sell it to the pet parent for around $300. This allows them to send the healing home. The Assisi Loop provides targeted pulse electromagnetic field therapy, which increases endothelial nitric oxide in the tissue, which in turn reduces inflammation and pain. It's a way for the veterinarian to send a healing home. Pet parents like to be involved in helping their pets recover from a painful episode or surgery or what have you. And so this is an opportunity for them to purchase a loop. As you can see, we have a little bit larger loop, a little bit smaller loop, depending upon the species. We have an even smaller one for dental applications. And we actually build it into lounges or beds as well, which allows for pets who are suffering from the pain of arthritis to get relief each time that they're in it. This is a product that we also acquired when we acquired Assisi Animal Health, also had revenue, and we've seen that revenue grow slowly but steadily as we move forward. Moving to diagnostics, our TruView microscope is unique in the marketplace. It is the only microscope available that prepares the slide for the technician automatically. You know, if the technician is preparing the slide, they have to first put the blood on it, then use another slide to smear it just so, and then they have to fix it, dry it, stain it up to 3 times, dry it each time. It's a 3, 5, 10-minute process depending upon the technician. With ours, you simply put the blood on the slide, put the slide in the microscope, and you're done. The image appears on the microscope, but instead of disrupting the veterinarian to have them come and look at the image, it also goes to the cloud. Once it's in the cloud, we send it back down to the browser that the veterinarian would like to use, and so they can wait until they have some time in their day to be able to review the images. If they're satisfied with what they see, great. On the other hand, if they would like a pathologist report, they press a button and they'll get a board-certified pathologist report within 2 hours. We provide this from a cash flow basis, easy on the veterinarian. We provide this to the veterinarian for $500 a month, actually $495 a month on a subscription basis, and then we charge $75 each for the pathology reports. A very significant product, which we just launched sort of middle of last year. We expect good things from it as we move forward. The Truforma device is a laboratory analyzer. It analyzes blood and determines a level of various elements in that blood as a way to help diagnose the animal. It is unique in the marketplace because it is the only technology that utilizes the proprietary bulk acoustic wave sensor technology originally developed by Corvo Telecom. What this technology allows us to do is to perform assays that cannot be performed by any other point-of-care devices. Instead, the assays that we provide are those assays that they need to send the blood out to an outside lab to do, because only in the outside lab do they have the big machines, the gold standard machines that can perform these assays. On the other hand, our TruePharma device, which has the footprint of a size of an 8.5 by 11 sheet of paper, which we provide to the clinic at no charge up front, no capital required. Rather, a simple agreement that simply says, as long as you're buying the cartridges, you can use the device. Our cartridges, our system can perform those assays. So while the clinics all have blood analyzers from the big 2 or 3 companies out there, all have those devices to be able to do the everyday, CBCs and things like that. When it comes to the assays that we provide, the only alternative today is for them to send them out. They like to do them at the point of care. It speeds the treatment. It also saves them some money, improves their profit margin, and certainly enhances their workflow. As we continue to develop additional assays for this technology, we'll continue to expand the market, applicable market for it. We're at around 14 now. We have 4 to 6 coming out this year, and there's no shortage of assays as we move forward. The final product is the VetGuardian pet monitoring device. This is a no-touch, hands-free device. It hangs on the outside of the cage. It points inside at the animal, and then it uses Doppler radar signals, video camera, thermal imaging, night vision to be able to get the temperature, pulse, and respiration, the vital signs for the pet without anything touching the pet. 70% of the time that a pet passes away in a practice not associated with euthanasia, it's in this post-op surgery period. That post-op surgery or ICU, or maybe even overnight, is when the pet is most vulnerable. And this device provides continuous, constant monitoring. Now, even if they're not paying attention, again, this data goes to the cloud, just like the other diagnostic products send the data to the cloud. We then send it back down. Maybe it's on a big flat screen TV in the clinic where people can watch and see how the pets are doing in recovery or in ICU. Or maybe it's on their phone or their iPad. They're at home and there's a pet overnight they want to check on. In any event, whether they're paying attention to it or not at the moment, if any of these metrics go above or below the safe range, they get a text or an email to whoever's been designated to get it, so that they can immediately respond to that patient's distress. For these products, we utilize an omnichannel approach. We have direct salespeople in the United States. We also sell through distributors in the United States, the big MWI, Patterson, Covetrus, animal health distributors. We also have inside sales reps and veterinarians on staff to assist with clinical issues. In fact, our sales force is newly led now by the former VP of sales of Heska, which was recently sold to Mars. And with the sales force of 35 at Heska, he was able to lead the charge and build their sales to over 220 million. He's doing it all over again now with Zomedica. In addition to the U.S. Sales organization and our U.S. sales, we do sell in certain countries around the world. We have a subsidiary in Japan. We also have distributors in various parts of the globe today. Some of these we acquired with our PulseVet system. Some of these we acquired with the Assisi system. We are now in the process of merging these distribution networks, making sure that each of the distributors for small animals carries all of our products, which today is Assisi and PulseVet. In addition, this year we'll be expanding the number of distributors in certain geographies, and as well we'll be launching our 3 additional products, TruePharma, TrueView, and VetGuardian, into international distribution. About 15–20% of our revenue over the last couple of years has been from international. That is with only the PulseVet and Assisi being sold in their respective distribution outlets. While we expect this percentage to remain relatively the same, it will remain the same while we grow the U.S. market as well. We manufacture all of our own products at two facilities, one in Roswell, Georgia, just outside of Atlanta, which we moved into after we'd acquired Pulse Veterinary Technologies, and then last year expanded again. We manufacture all of our products there with the exception of the TRUFORMA analyzer cartridges. Those we manufacture in the facility in Plymouth, Minnesota, just outside Minneapolis, which we acquired as part of the acquisition in October of last year of Qorvo Biotechnologies. Between these two centers, we're able to manufacture all of our own products, maintain industry-leading margins, and distribute efficiently across the country and really internationally as well. To take just a step back, in October of 21, we found ourselves with a substantial amount of capital, and we've deployed that capital, we think, efficiently and prudently. And we've made 5 acquisitions during that time. Pulse Veterinary Technologies, Assisi Animal Health, Revo Squared for the microscope, structured monitoring products for the VetGuardian, and most recently, Qorvo Biotechnologies, which previously had been developing, manufacturing the cartridges for TRUFORMA for us. As we made these initial acquisitions, it was to do 2 things. One, acquire products and revenue streams, but also to build infrastructure for the company. We've done that now. As we look to the future, we still have $100 million as of the end of last year. We still have $100 million in capital, and we expect to deploy that capital efficiently as we move forward. While each of these acquisitions, we focused on those 5 pillars I talked about. As we move forward, we'll focus not only on those 5 pillars, but also on those acquisitions that would be accretive to earnings so that we can hasten our arrival at profitability. From a financial standpoint, as we mentioned earlier, revenue has been growing nicely on a year-over-year basis. We have provided guidance for this year to achieve revenue of between 31 and 35 million, which would represent a substantial increase over last year. And as you can see from our quarterly revenue graph on the bottom, each quarter that we've been out there, we've set a new record for that particular quarter. Our business is a little seasonal. We sell a lot of capital in the fourth quarter of each year, not unusual in animal health or human health business either. And these last 3 years really have demonstrated that. So we grow each quarter. We get to the fourth quarter, we take a very nice increase, and then falls back a little bit the following quarter, and then begins to grow again. The margins, as you can see, when we were really focusing on those products that were already on the market, Pulse Vet and Assisi, you can see our margins were very attractive, above 70%. As we began acquiring companies and investing in the infrastructure, moving the manufacturing to our facility in Georgia, or refining the facility in Minneapolis, in each of those cases, you bring on some additional costs that affect COGS. So you could see that our margins, while they're good now, they've been higher before, and we expect in the future, as we work through these integration costs, that we may see margins above 70% in the future. From a cash standpoint, you can see that our operating burn has certainly been manageable, and that most of our cash has been deployed to make acquisitions as we move forward. So in conclusion, I'd like to just summarize by saying that we operate in a very large growing market that is resistant to economic downturn. We have developed a portfolio now of 5 platform technologies, each of which is capable of being expanded with new indications and new enhancements, new applications to equine or small animal, depending upon their original application, and all of them highly proprietary and highly differentiated from competition. We have a very strong commercial channel put in place in the United States, and we're building a stronger network outside of the US to continue to increase adoption. Each of those products we have the ability not only to expand through R&D, our product reach and indications, but we still have a nice amount of capital to continue our acquisition strategy, while at the same time operating very efficiently to provide substantial industry-leading margins to get us to profitability in the relatively near term. And I'll define relatively near term as when we see revenues at an annual run rate of around $50 million, which we expect to be at our first month of profitability, potentially first quarter profitability by the end of next year. As we sit here, we're extremely well funded, no need to raise any additional capital, as we have the ability to self-fund not only our operating burn, but also investment in organic growth as well as potential additional acquisition opportunities. With that, I'll be happy to take any questions.
Thank you, Larry. So yes, please, audience, feel free to submit any questions you might have. We have just a little bit of time for Q&A. The first question is, what is the competitive landscape and where is Zomedica, where does Zomedica fit in amongst your competitors?
Yeah, great question, Pat. So with respect to PulseVet, we are the only electrohydraulic shockwave technology out there. There was a competitor in international market that was acquired by Pulse Veterinary Technologies before we acquired them. With respect to the CC Loop, we're the only provider of targeted pulse electromagnetic field therapy in the animal health space. Our TRUFORMA platform is competitive if you look at other blood, the presence of other blood analyzers, but when you narrow it down to the assays that we provide, our competition there is the reference lab that you have to send out to. None of the other existing point of care devices can do the assays that we do. The VetGuardian is not only a new product, it's a new category, wireless, no-touch monitoring. There's nothing else like that on the market. We do have competition with the microscope. Antech, IDEX, Zoetis all have some form of digital pathology platform. Ours, we believe, is unique in that it prepares the slide for the technician. Later this year, we're going to be adding AI capability to it, and we'll then match up very nicely with one of the competitors, which does offer AI interpretation now.
Great. And then the next question is, are you looking at any partnerships?
Yes, as a matter of fact, we are. So it's a natural for us to be able to pair a diagnostic result from our TRUFORMA device, for example, to a therapy that's provided. So, for example, we recently launched the TRUFORMA into equine, right, to diagnose Cushing's disease. We recently launched the CPL assay to diagnose pancreatitis, and we have the optimized TSH for hyperthyroid for cats. Each of these conditions has therapeutics available for it. Otherwise, why would you need a diagnostic? So we see opportunities for us to partner with companies as we move forward. And we believe that we're gaining the critical mass necessary to be able to make those arrangements.
Great. And I think we have time for one more quick question, which is, what products are you planning to bring to market this year? What's the roadmap ahead look like?
Yeah, sure. So for PulseVet, it's the same product, but for new indications. We've recently seen some research and studies that show that it's effective for equine asthma, which affects 15% of horses over the age of 12. We've seen some other articles that have come out that show really good new indications. So that's a kind of a launch as a new indication. For the VetGuardian product, we expect to launch that for equine applications later this year. For TRUFORMA, we've got 4 to 6 new assays coming out, some for equine and some for small animals. And for the microscope, we'll be launching a version of the microscope, actually the software really, which is included with the scope, that provides AI interpretation of the results as well. So we've got plans for each of the products to continue to develop and launch new extensions as we move forward through the year.
Fantastic. I think we're actually running up against our stop time. So I want to thank you, Larry, and thank you, Peter, for joining us today. And thank you to all the attendees for being here.
You're very welcome. Thanks for the opportunity.